let's look at some of the best performing sectors of FY 2024. Nifty Realty, I mean, phenomenal set of returns, 133%. I mean, it's been a multi-bagger story for, for the investors out there. PSU banks has been another top performing sector for the markets. Auto is another one. And I mean, look at, pharma and metal as well. They have also delivered 50% or so returns. No, Mohit, coming to you, I mean, brilliant performance from your realty stocks, PSU stocks, auto stocks. Do you expect any of these three sectors, can they, repeat their performance in FY25?
So reality, auto, and the one you said was PSU, right?
PSU banks.
Okay. Look, honestly, whenever equity markets do very well, I have always seen that reality as a sector picks up with a lag, right? It picks up after 6 months or after a year of a great equity rally, and which typically is what is happening in the markets right now. Honestly, but I don't know how long will this last. But people tend to, or HNI investors tend to book profits from equities and move it to physical assets, and which is where reality gains the most. And we have seen huge amount of demand on the residential side in all the big metros, and even the commercial side has been picking up after the work from home environment has gone out of the window. So my sense is Nifty reality should continue to do well for the first half of the year, but I'm really not sure whether it will persist and sustain for the full financial year going forward. I'm a little more bullish on the other two sectors, which is the PSU bank and the auto. Not per se PSU banks, but I'm bullish on the entire banking space on the whole put together, right? So for me, I think the categorization between PSU and private is very difficult to make for the next financial year. As of now, I'm not very clear in my mind as to which one will outperform the other. But my sense is the private banking space also has been lagging a lot, and it's just a singular rally in PSU stocks, PSU banks, which we have seen. And my sense is the private sector peers should catch up now. We will see a good private capex cycle picking up in the country, hopefully post the elections, which is what everyone is hoping for and waiting for, because we haven't seen too much of private sector capex happening in the country for last few years. It's only been government capex, right? And I think with the private sector capex picking up, private sector banks have to come into play in a large way. Even PSU banks will come into play. Even on the valuation side, if you compare, most of the PSU peers are still quoting at a very nice, comfortable valuations as compared to their private peers. So I think there is some headroom out there with the cleanup which has happened in those banks, the NPA story and everything. I think it's looking very good on that space. Nifty Auto has been a great pack, and auto story in India has been a fantastic dream story. Honestly, I think if I'm not wrong, we will sell almost 42 million passenger vehicles in the country. India will become the third largest country in the world in terms of passenger vehicle sales after US, China, and there'll be India. India will overtake Japan this year. And the story looks extremely robust. The demand, the appetite for having a four-wheeler is phenomenal. Even on the two-wheeler space, the EV space is kind of creating a lot of waves. But the valuations out there are extremely rich and crazy to my mind, honestly. But yeah, on the passenger vehicle segment, I think I'm fairly bullish, even on the commercial vehicle segment. So these are two spaces, which is the overall banking space, not just the PSU bank, but and the auto space. I continue to remain bullish.
All right, you're bullish on auto, and you also pointed out that there is a clearly a stark contract as far as stock performances of the private banking private banks and the PSU banks are concerned. But Mohit, circling back to realty stocks, we are also seeing a stark contrast in what's going on in the housing market in India versus the rest of the world. I mean, our housing market sales are growing in double digits on a quarter-on-quarter basis. Prices, I mean, surging even more swiftly, whereas elsewhere, housing market is pretty much in doldrums. I mean, considering we are in a high interest rate regime, what explains this stark contrast, sir?
I think, yeah, that's a fair point, Suyash. In a high interest rate regime, which has lasted for a fair bit of time, to see this kind of demand, I think it's surprising to many. But my sense is it is more the equity market money which is flowing into the housing market. Plus, the affordability part has been increasing across the middle income category in the country. The middle income segment per se has been widening in India for a fair bit of time. And I think I was reading some study which said that the middle income consumption alone By 2040, India and China will account for over 50% of middle income consumption globally. So this middle income segment in India has been rising, and I think the demand or the appetite for having one's own home or residential property is has always been in this country, right? That's been the biggest dream of many Indians. And I think that affordability part, the wage increments which have happened overall, not just in private segment but in the government sector, if you see, Suyash, the increments have been fairly robust, right? So my sense is that entire equity rally plus the affordability part in combination has been fueling this reality thing, and also the back was beaten down for almost a decade. So there was a lot of intrinsic value. They were quoting extremely cheap some of those reality names, and I think it was one story which was bound to happen possibly, but no one could have predicted this kind of rally.
All right, but moving on, we have spoken about the wealth creators. Now let's Mohit talk about the underperformers. Media, private banks, and FMCG. I mean, their respective indices did not perform as well. But considering the kind of 18% returns on FMCG and 16-17% returns on private, sector stocks, it's really, I mean, we are drawing a, we are skating on a thin ice when we are calling them underperformers. But considering that they have not done much over the course of the year, at least they have performed the broader market at large. Anything between the three that looks attractive to you at current valuations?
Look, Suresh, honestly, I think you said it right. It's a travesty that we have to call these sectors underperformers just because they're given whatever 18, 14, 15% odd return. However, calling IT an underperformer with a 22% odd returns, I'm not sure in which other country would you do that. But yeah, that's been the crazy story of Indian capital markets, honestly. Look, if you ask me out of this entire pack, I like the IT pack. I've been vocal on that on your show itself for a fairly long while. That with the rate cycle turning globally, it's just that intermittent uncertainty came into the rate reversal cycle for last 3 odd months or perhaps last 6 odd months, that we weren't very sure when the Fed is about to go on the rate reduction cycle. My sense is we are quite close to that phenomena. We are quite close to the cycle reversing. And tonight, we will have the PCE data which will come out. Hopefully, that will give us even more indications on whether we can anticipate a rate reduction effective June onwards from the Fed. And if that starts happening, my sense is IT back will rule. I would
Hmm.
still say it's 6 months, perhaps wait and watch kind of scenario for the IT pack. But I think the second half of FY25,
Hmm.
I would be extremely bullish on IT pack, and perhaps a little early, be a quarter early if the rate cycle reduction or the rate cycle starts reversing
Hmm.
earlier, right? And obviously the results from the Indian bellwethers, I think Accenture result played a spoil spot out there, but Infosys TCS results will be a big and even Tech Mahindra to some extent will be a big thing for me to watch out
Hmm.
in the month of April. I think if all goes well out there, then perhaps that is a pack to watch out for. Private bank, I said just now that I'm extremely bullish on that pack, and my sense is private bank will definitely lead the market this year. Honestly, within media, I'm really not very sure. Honestly, it's very difficult for me to distinguish a right company from the wrong one, or a good richly valued company from the other one
Hmm.
on that one. I'm not very keen on the media pack per se, barring one or two names which you can perhaps figure out that there are some stories out there, right? But otherwise, if you ask me to name the pack as a whole, I would
Hmm.
not go for the media pack. FMCG, look, I think the valuations are extremely rich, honestly. The ROEs and ROCs are very good. Great companies, great managements, great setups all across. But the growth rates have been very, what do you say, underwhelming for the entire pack, right? And the rural demand has not picked up in the country. The
Yes.
rural space is not kicked up. My sense is the election spending will give us a good indicator of whether the rural demand is picking up. That will be followed by monsoons. If I
Hmm.
think these two stories go out well, so you have the IPLs getting played out, which will any which ways drive some consumption, though largely urban, not rural. And then you will have the elections simultaneously, which has always historically driven a lot of consumption across the country, especially rural consumption. and then you will have the monsoon. So all these three triggers, once they are played out, we will have a very good indication of the FMCG pack. My sense is there are some beautiful names out there, looking extremely good and attractive, but I think there will be more a stock picking game than the entire sector working as a yeah, so that's my take on these names.
All right, Mohit is bullish on IT and private banks. Media not so much. FMCG, I mean, we need some answers over there. Rural demands needs to pick up, and we also need to see how the monsoon goes.